Hello, welcome to McBoss Capital channel. My name is Michael Chu. This will be the US market recap video for the week ending July 17, 2026. This is the weekly Nasdaq composite chart. We have been, over a month ago, 2 months ago actually, we start to move up pretty nicely from the bottom here in April, early April, and since then we went up to pretty nice, like roughly 9 weeks, around 9 weeks of run here to the top here, and then we reversed pretty hard, and then since then we've been kind of just pushing back and forth near the 10-week moving average, right there, the red line, and you can see we've been going up above it and down below it, back above it, down below it right now, and this week, we are closing at the low range again, below that red line. On the daily chart, you can see more clearly what happened here. We have this really nice run sitting above the green line, the 10-day moving average, most of that run. And then now recently we have gone into a more consolidation phase. We have been finding support near the lows here. So far the lows has been higher. And if Friday's low hold, that will be another higher low, which is not a bad thing because we're just in a consolidation phase. But we are below the red line right now, and we did that last time here. We bounced back very quick. Look at that, 2 days here, right? So we would like to see something like that if we can bounce back very quick. But if this start to take a turn and undercut the previous lows here, then the game has changed once again because then there's no more support level here. The other thing is, sometimes the market will test those moving averages many times before it fail. And the problem here is that we're also seeing the lower highs here, right? So this is the high here, lower high, and now recently we're seeing this lower high here too. Look at this level here. We can see it's trying to cross, around this level here, like roughly around 26,300 level. It's been stuck there many times. Every time it gets up to there, it just reverses. And now because we have broken the recent tightness here, because this is a very tight range here, we've broken it. So that itself is considered very negative. So until we see this coming back above the red line or even above this recent tightness, then I would say, hey, maybe the game has changed once again. But for now, it looks more negative than positive at this moment. And, if we have one bad day, we can easily test the lows here. So that's something to watch out for in coming days or even weeks. Obviously, we have many earnings coming out, especially in the Nasdaq area. So that will play a big role in where the market is heading next. It's still too early to even have an idea of how the earnings will do because not many stocks have reported, especially in the Nasdaq. So once that starts to come, I think maybe if things are good, then nervousness will go away and the market will slowly be bought up again, and we might have another, sustainable rally after. That's the hope of this. But right now we are in consolidation phase, and my sense is probably we'll see more choppiness as time progress, as earnings season continue, and then eventually once all the cloud is clear, things are more, people have all the numbers, understand better what's going on, then maybe there'll be a chance for another rally. So hopefully that's what will happen. We'll see. This is the S&P 500 weekly chart. So this one looks a lot better. We came up, from this run as well, and then we kind of just mostly hold above the red line. There was 1 week here where we went below it, but very quickly we bounced back the following week, and so that is a good sign. And even this week we fell, but we just falling back to where the red line is. So again, we're seeing that red line, which is the 10-week moving average, a support line at this moment. Here's the daily chart. You can see more clearly on the recent kind of pulling back and bouncing back and pulling back, bouncing back, and you see it more clearly here. And each time it seems to make higher lows as well. And recently we did come back above this kind of trend line zone here that's going down, and then we broke above it, and like not only once here, and then we have this one here too. But again, we still have this high here where 2 times it tried to go above that level, it couldn't, and we came back right now. So because we broke that tightness here, right? Because normally when you see tightness, you don't want it to break that low of that tightness, and we kind of did that recently here, for the last, what, 6 trading days. We broke that tightness there. So, we want to see it brings back up, and then that will be better because then we can say, hey, the market proved itself once again. But each time it breaks, there's a high chance, that it could break further. So you just don't know. Like right now, we had the red line. Even though we haven't broken it, like, and stay below it, you never know. It could just happen all of a sudden, right? So we just want to be cautious about that as well. And one more thing I want to say is because those lines are so important when they break those 50-day or 10-week moving average, it can go a lot further down, and we see that in stocks as well. So here's the Dow Jones chart. It looks a lot better, like recently, right? I mean, in the last 12 weeks or whatever. But recently, we see this is the second week down. Now the difference here is that even though it's the second week down, it's still way above the red line compared to S&P and Nasdaq. So the reason why is, again, because it hasn't really pulled back that much yet, and it was like 2 weeks ago that it made a top here. Versus Nasdaq and S&P make a top 5 weeks ago, and so that is the big difference. But yeah, having 2 weeks down right now, even though it's still above the red line, is not a good thing. Because again, we're breaking to new lows, right? We're making newer lows, and sometimes when you make newer lows, it could break further, right? And because the momentum of the downtrend has started, it doesn't look like a big downtrend, but it is some sort of a downtrend because you have lower lows, So that is the challenge here. We are sitting at the 21-day line. It had been tested many times before, so even here it went down, but the next day we came back up. So if we do go down, you want to see it bounce back right away. If it doesn't bounce back right away, that's usually not a good sign that it can go further down. So that's something we want to watch for. Is we could have a Monday morning down day, for whatever reason, and then it'll break this line clearly, and if it doesn't come back that day, the next day it should bounce back. So those are the kind of time you could give it if you want to hold. But yeah, anyhow, that's just my take on that. But it's not looking as strong right now, even though it's still above the red line a lot. Here's Russell 2000 index on the weekly chart, also climbing very nicely in the last 12 weeks, but the last 3 weeks it actually has been pulling back. Now this week, even though it was down, it didn't make a lower low. That is one positive side of it. It is still also above the red line. It's not near it because it did bounce back slightly. And we can see that on the daily chart on Friday here, we did come down below the pink line 21-day moving average, but we actually closed back up at the top of the range and only down 0.4% for that day, which is not bad at all. Now, of course, we're still seeing this upper channel line, which is the downtrend coming down, right? But so far, this pulling back has been kept to a minimal, right? And it's not too volatile, and that also showcase some of the financials that have been doing really well recently, holding up this area. So we'll talk more about the financials in my next growth stocks video. In this video, we mainly talk about the macros and the big mega cap companies, usually, mostly in the tech area. Here's the CapForce IBD50 ETF on the weekly chart. You can see this index, which follows the 50 top growth stocks, have been very volatile. Even considering the market have been running since April until recently. Look at this chart. It doesn't look anything like the index. I mean, the beginning, yes, it was really strong, but then you see this right here, it's just a mess right here. Right, we have this huge down week, and then we have this, big bounce back here, and then the other thing is we're seeing this is now down for 4 weeks in a row, and we hit the black line here once again. So this has been a pretty big, probably I would consider this correction now. It's over 12%, right? So, yeah, like, was this gonna end now? Like, I don't know, like, because a lot of the area that's being hit hard are in the AI chips and related area, and so this has been taking a tumble, and because a lot of those stocks are on the list, and maybe they'll bounce back anytime soon. Who knows, right? Like, no one knows, or it could continue to drop further, and this completely is a bear market for that area. Like, not just a short-term correction, but no one really knows. We did have a strong bounce on Friday, but even then, it really is not much, right? Because it didn't go up at all. It's still down for the day. Of course, there's some dip buyers come in here at the 200-day line, but will this last? Obviously, the 10-day is coming down strong as well. Like, who knows, right? Like, if this break the black line support line, then there'll be even more sellers after, because everyone will start to panic. Then maybe, usually when people panic, that's usually when we see, the end of the, like, just like right here, we break below the black line, and then it goes much more further down because people will sell at, they start to panic, and then once that's over, then we start to see the rally. So that could happen again here. Well, or it could be like this first base here, that we see here, that bounce back, and then from there it slowly recovered, right? It still see lots of volatility, but eventually it slowly recovers. So that could happen too. So there's a few scenarios here that could happen. Who knows? So here's the 10-year Treasury note index here. We been climbing above the 10-day pretty strong, but it did drop pretty hard on Friday. So that is okay, 4.54%, just near the 10-day. It did bounce back from the 21-day after gapping down. Here we see the US dollar index here is getting a little bit weaker, but it's still trading pretty tight. We got a big rejection here after Monday's run here above the 10-day, but from there we hasn't done that well. We're just trading down and also like sideways right now. Again, Thursday, Friday, very tight range. If it does break the 1021 day, then it could go further down. US oil here been going up because we have seen the US and Iran war kind of continues, as US and Iran are back at hitting each other again. So that has really propelled the oil much higher. And at least for the stocks I follow, the refineries have been doing really well. And that's a really big jump. We'll talk about that in the next growth stocks video, just to highlight some of them as well. It is coming back above near the 50-day though. You can see the red line here. So not sure if that will be a rejection there or whether it can continue above it. Gold shares continue to find no bid as it comes near the short-term moving average, the green line here and the pink line. It just constantly get rejected. Same thing with silver, very similar chart. Copper tries to come up this week. You can see above the red line for a couple of days, but then it pushed back down very quickly here. So, it's not over yet. There's still a chance for this to rally, but the first test here has failed. It could possibly again come back and try again. And yeah, copper usually, does well when the economy does well. And also the reason I brought up this chart is because some of the transportation stocks are doing really well right now. And we'll talk a little bit about that in the next growth stock video. So, that's the reason maybe this could also potentially start to do better. We'll see. It's hard to say. Here's the Bitcoin. It just hasn't made much movement. It tries to come above the short-term moving average, but each time it comes up, it's been knocked back down. Although it looks a lot better, right? Because this is a very tight range right now. Perhaps eventually it could move again, but right now it's just really slow, just moving sideways most of the time. So for the week, we have seen IBD signal change from allocation perspective, from 60 to 80. Now it's 40 to 60% allocation. So we had 2 distribution days this week, and the count is really high. Nine distribution days here for Nasdaq, 5 for S&P. And Nasdaq is below the 50-day as we saw earlier, like quite significantly. So all this kind of pushed the allocation back to 40 to 60, which is more near neutral zone at this point. But that's a lot of distribution days. Probably won't come off anytime soon as we continue to pick up distribution days. For the week, we do see, interestingly, more accumulation than distribution by the end of the week. And same thing with industry groups. We see more industry groups being bought up. So the market is not all negative. Like I said, mostly the AI and tech related areas, chips related most especially, are getting hit the hardest. And that's where the downside is for the market. But there's other areas that are also being bought, as we see here, based on accumulation and distribution. In terms of the sectors, throughout the week, you can see Nasdaq are near the zero mark. This is based on net accumulation minus distribution. So it's slightly negative right now, so meaning there's still more stocks being sold, distributed than accumulated. Um, and then on the retail side, also more negative. We did close strong with industrials for the week. And health are also surprisingly not that positive. It's just almost like, near neutral here. And, even commodities, a lot of commodities area getting hit hard, except like I said, this has also come down a lot from the earlier in the week, despite oil prices going up. So still, yeah, a lot of other commodity area, as we saw, gold, silver getting hit hard. Financial is the one that has shown the most strength this week. You see, it ran up to 76.59 net more accumulation. So more stocks under accumulation than distribution. So yeah, so some industrials and some financials are doing really well. There's some software holding up slightly. We'll talk about more of this in the next growth video. Make sure you follow that. So yeah, we'll talk about this very quickly here. SMH down 8%, very strong. IGV gained 0.4%, so not as bad compared to chips. We'll see that. We'll go through more detail in a sec. The mining area is really hit hard, down 5%. Energy jumped 4% here. The health actually are almost neutral, up 0.2%, and the industrials here dropped 1.4%, and the financials are up 1%. For next week, we have mostly not too much economic news, mostly earnings here starting IBKR. This is wrong here, it should be IBKR. And then we have GEV, Genoa. We have ADMI, AMD AI event on Wednesday. We have Google, Tesla, Intel reporting this week as well on Thursday. Here's the WinX Semiconductor ETF. You can see we are pulling further down below the red line here. So this is, definitely in correction territory, down 17% on the daily chart. You can see, once it gave up the red line, it went much further down at a faster pace. That's usually what happens, especially after a big rally, when they break a key moving average and no support comes in to bounce it back right away. Usually will create more panic selling. And again, the panic selling is usually where it drops the fastest. And then after that, it will kind of gyrate a little bit, and but again, we don't know how far it will go down, whether it will come down to the black line or whether it just come down a little bit more and then find support there and slowly move back up. So that is the thing we don't know. So NVIDIA was doing really well. It was bouncing back this whole week. You can see even above the red line here, the 50-day moving average, but very quickly it got knocked back down on Thursday, and then Friday we went down even further. So again, sometimes, the first try off the bottom may not work, right? And this is a clear case of that. And if it does bounce back, then we'll try a second time to come above the red line. Maybe the second time might work. But right now, until that is clear up, because we could start a whole new downtrend here, right? So just because we have come back up above for once, that's consider a bull trap. And sometimes bull trap is the worst because you think that, oh, it came back up once, it's gonna come back up again, but actually it actually going the opposite way, and that's usually the worst case scenario. And we did have here's Taiwan Semiconductor. It was reporting this week as well, but unfortunately, even with I thought the numbers, I think most analysts say the numbers were good, but I think it's the guidance are lower, and that is what kind of pushed the stock a lot down a lot further here. And you see how fast it came back down. Is this last 3 days drop was probably quite significant compared to the last 6 7 days here. It's just very significant drop. So again, this is another reason why once it breaks the red line, if no support comes in, it can go down a lot further. Here's Intel following similar trend. This one also been hitting hard, down 33% right now. Quite significant. And it is reporting next week, so we'll see, how it does. And that's the risk now because even though it's already down a lot, if they miss their earnings, they could come down even further because the negative, the sentiment's already so negative. So, there will be more panic sellers, if there's now that with that being said, it could bounce back after that. Sometimes when it's oversold, it will bounce back in the short term. While this 10-day is still way above here, imagine this come down to the black line. It's very far, it's oversold in that sense because it's so far below the 10-day. Here's AMD. It was trading really well, even recently holding, even though it's very volatile, but even this one broke, following the market trend here. It did climb back significantly to the top of the range on Friday. So that's not bad sign. But still, when I see days like that where it bounced back, but it's still negative, I still count that as a negative day. I don't look at it as like, oh, this is a reversal. But because it's still below the previous day's closing, that to me is still a negative day. So I look at it as if it's just another negative day. Yes, the reversal looks really good right now, but we need to see a follow through day that can push it back not only above Thursday's closing price, but even above Thursday's high right there. And also because the short-term moving averages are so close to it, usually I don't buy any stock that's under the short-term moving average. Here's ARM. ARM did again also very similar. It bounced back quite significantly on Friday. This is definitely an upside reversal because it closed positive. So yeah, this looks pretty good. I mean, the problem is the 10-day green line is coming down so fast. So if the downtrend continues long term, usually what that means is it will come back towards near that line and get rejected there. So, there's not much room here, honestly. Like if I did buy on Friday at near the close, there's not much room for it to go up. I mean, 267 to maybe near 300, right? Because it could get rejected. So, I mean, still a good gain, but is it worth it for that trade? So that's the question that, I would have to ask myself. And let's say I don't usually go for short-term gain because it's more of a gamble, but there's a high chance it'll come back to at least the green line. But again, we don't know because the market is just on a tear right now. This one is down 40%. Like it's very quick how fast it can come down. So as good as this chart looks, there's another saying, try not to catch a falling knife because you might catch it, but you could get hurt still. That's the problem. Here's Broadcom AVGO. This one also tried to come back recently near the red line but got rejected, and look at where we are now. We are near the black line. We did bounce off it, but again, it's still a red day, still a down day. Yeah. So this is the software sector iShares ETF here. It's been holding, right? Week to week here, it's been holding above the red line, like near that red line. And we did come down below it, all 3 weeks, trading below it, and also above it. And you can see the black line coming down, you see the red line coming up. It's converging, and at some point, it's gonna make some decision, right, to either go above the black line or come down below the red line. On the daily chart, you can see those black and red line more clearly here. And again, we're finding support. That's the good thing about the red line, but we're seeing resistance at the black line. So at some point, this will resolve itself, and I'm guessing earnings will be the key, right, in the software area. So again, earnings season is usually a big deal to many stocks, especially in terms of general sentiment towards a specific area, whether it's software, whether it's chips, and AI related stuff. So those are things to watch as this earnings come through. It can, change the direction very easily. So watch out for that in the next 2 to 3 weeks as many earnings, will start to come out from these two areas. So for now, we're looking at the larger caps in the software area, Microsoft. You can see this one has been finding resistance at the red line here, although it is improving slightly, right? Because compared to last week, we are at a higher ground. even though we're still seeing resistance at the red line, we are higher ground. Now this one is relatively weaker, right? Because this stock is below the red line right now, whereas we just saw the index is at least trading above it, right? So obviously there's other software stocks which we'll talk about in the growth stock video that are doing a lot better than some of these large caps here. But for now, we're just looking at large caps, and this is the challenge right now. It's doing, like I said, better than the week before, but it's still seeing lots of volatility and pulling back once it bounced a little bit. So Google is reporting this coming week, and so it did not look as good as Microsoft. Look at this volatile move on Thursday. I think it was related to some news on their Gemini model releasing later. I'm not sure what the timeline was, but it was pushed back a little bit, pushed back further, and so that caused the stock to go down. And then on Friday, I think it just fell along with other tech stocks. So that was the negative there. And so again, earnings season can change the direction. We'll see. Amazon also pulling back after hitting resistance at the red line. But again, we're seeing some support of the lows here on Friday near the short-term moving average. We have Meta here, also pulling back here on Friday as well, Thursday and Friday. Again, this one again, it doesn't look as bad because it's still near the 10-day, right? And it's in a upward slope trajectory, which is pretty strong actually. So yeah, it doesn't look too bad, this one, but it's volatile, that's for sure. Here's Palantir, bounce back from the bottom, finding resistance again at the red line. Now this week you can see it trade near or above it 3 times and close above it. And then on Friday we came down again to Thursday and Friday we came down to the lows of those range, and it's near the 1021 day. So we just worry, they're converging the short-term moving average. Can it come above it? We'll have to see. But it's looking better. Like the chart is looking a lot better than previously. So we'll see if this can work this time. Here's Apple pushing towards new high. This is actually surprisingly very, very strong. We have the breakout this week on Monday, but it pulled back. Then it pulled back slightly more on Tuesday. But look at that tightness there. It's such a small bar range there for that day. And then on Wednesday, we just come out of the gate, shoot up, gap up, and shoot up. And that's the breakout that a lot of people probably bought. And Thursday and Friday, look at that. It just continues. And you can see the slope of the green, the pink, and the red are now starting to curve a little bit, especially on the green line and the pink line. So Apple is doing really well right now compared to many, many stocks, not just the large caps. Here's Tesla. Part of the reason it's been coming back down is because of SpaceX, and this one is shooting back down near the lows. This is looking at danger zone, because if we break 368 here, we can go down even further because we'll see more panic selling. So let's go to SpaceX as well, just to get a sense, because again, I don't know the backstory, but there's supposedly chance of SpaceX buying out Tesla, but now that's not looking highly plausible. So maybe that's what's bringing back down Tesla. But here's SpaceX, really big drop, really big. Look at this severe selling in 5 sessions this whole week. Once it broke the lows here, right? We broke the lows last week, and then after that, like I said, and this is when the area is under like correction, it never is over until the panic selling, people who will sell when there's panic, it's over. So, but obviously you can see here, Friday is a pretty big drop here, down 5%. So, yeah, very negative. It's dropping like a rock. At some point, it will stop going down once all the short-term sellers are gone, and the panic selling is done. Finally, we have Netflix here, which reported this week. Netflix didn't have a good earnings report and guidance, at least from this stock perspective. It gapped down pretty hard on Friday, 7% after the report. Yeah, it's just continued to deteriorate in terms of its stock price, and it hasn't found support at the green line here. This is a good example of looking at a downtrend line. It hasn't really found any bounce through that, right? The green line is the closest it come to, and every time it comes near the pink line, it just get rejected right here recently, 1 to 3 days here. It got rejected and it just sits below that line and trading around the 10-day. And then now with this bad news, we went down to new low. So this could happen to many other chip stocks that I've been correcting because they've been going down to new low, and then when bad news come, even go down even further, right? So that's what I'm talking about. And when the evaluation get to a level where it's more makes sense for some long-term investors, then they will start to come in and buy them. But so far, Netflix hasn't found any support near the short-term moving average. It's like, I wouldn't buy this stock until it, again, same thing, until it can surpass that short-term moving average. So there we go. We have a few stocks that are reporting. Big cap stock like TSM and Netflix. Next week we'll have more Google, Intel, Vanova, and so more and more big stocks are coming. Banks also report this week. We'll talk more about that in the next growth stocks video, which did not bad at all. So that's the leading group actually. So we'll talk more about that in the next video. Thank you for watching. Have a nice weekend.